Hello and welcome to another edition of Investing for Generations. And today I want to talk about my second oil stock in my portfolio. And this time is a giant. It's Chevron. We will talk about the history of Chevron, about the management, about actual things on the oil market. Then, of course, about the financial numbers of Chevron. And I will give you my view if Chevron is a buy right now or not. So let's go. But before we start, don't forget to subscribe, like, share, and comment. Thank you. As most of you will know, Chevron is a big energy corporation. It was founded in 1911 and former was one piece of Standard Oil, but then Standard Oil get destroyed into the pieces, and one piece of that was Chevron, and then they walked the way alone. Chevron is engaged in almost every aspect of the oil, natural gas, and geothermal energy industry, including the production, refining, marketing, and transport, and also in sales, of course. And Chevron is one of the biggest oil and gas companies in the world. A very interesting thing is to know who's the owner of the big oil companies. And of course, if you think about the oil companies, you think about the big mogul of the past, but it's not like that. Most of the big oil companies are in the hands of pension funds, mutual funds, IRAs, and only 2.8% is in the hands of the executives. And as it say here on the screen, so big oil have a big impact on the American economy and on the American people, just because almost everybody is invested, even if they don't know. So if the oil company is good, the American economy should be good. And we can see this also here when we look at how many people in the States are employed in the oil industry. And you can see it's almost 2.5 million people working in this industry. So it have a real impact in employment and a real impact also in the social funds, in the pension funds especially. Then dive into the financial numbers. Chevron have a very high dividend yield of 5.97, but with a very, very high payout ratio of almost 250%. But I will say a little bit more about this and about the safety of this dividend a little bit later. Seeking Alpha just tells us that the dividend growth just is for 4 years, but in reality, Chevron is one of the just 66 dividend aristocrats in the market. When we look at the dividend growth over the years, you can see the dividend just grow all the time. Of course, Chevron depends a lot on the oil price, and as most of you will know, lately the oil price just plumped, and for short term it was even in the minus, in the negative pricing range. And so you can see also this oil price declining in the revenue of Chevron and also in the EPS, of course. This is just the same picture as the oil price. The declining oil price or the small oil price right now makes it very difficult to earn money for Chevron. But as we can see here, for the EPS, even with this very small oil price, Chevron was still able to earn money. And also the next thing, also the margins, of course, go down. At least the operating and the net margin go down a lot lately. And there is not a lot of money over at the end right now with this oil prices. But, and that's a very positive sign in my view, even with this small margins and even with this oil price so down, Chevron was able to have a positive cash flow and a stable positive cash flow, for me that's a very positive sign. And this is also one of the signs why I think the dividend, even with this crazy high dividend payout ratio. And just here you can see the high volatility of the oil price. This is a chart just from the 2000s until now. I'm very sure, or I think it's very likely, I don't know, but it's very likely that the oil price will come back at least to $50, maybe $60. This would be a kind of an average over the last 2 decades. And I think it's very likely we will come back there. And also here on this chart for the last 150 years, or around 150 years, you just can imagine the high volatility of the oil price. And then I also want to show you at what point we have a break even and at what point the companies are at the break even. Then take a look at the balance sheet. And the balance sheet of Chevron is very, very solid. We see here the debt equity ratio, which is only at 0.16. And also the total assets to total liability ratio has a very good and very stable 2.6 ratio, which just show me Chevron, even with this low oil prices, is not in trouble. And this is one more reason why I think the dividend is safe even until now. I mean, if the oil prices stay low like this for quite a longer time, I think at one point also Chevron have to cut the dividend. But right now, for the foreseen future, or at least for this year, I would say, I think the dividend is safe. Then take a look at the management. The current CEO of Chevron is Mike Wirth. He's the chairman of the board and the chief executive officer. And he is the CEO since February 1st. But he stayed in the company for a long time. He is in the company since 1982 in different roles. And so he knows the business of Chevron and the oil business in general, inside and out. And that's a good feeling. I think Chevron is in very good hands with this man. So I have a lot of faith in it. So no worries about that. But what's about the price? The current stock price of Chevron is $86. My calculated intrinsic value is $96, but this is very difficult with this high volatility business and the high volatile oil price. So my very conservative intrinsic value is $96. So we have a slim margin of safety of 10%. My paid price is $60.19. I bought the main shares at almost at the bottom on the 18th of March, and then just add some more shares on the dividend payout day. And so I come to my average price of a little bit over $60. So I'm up over 40% right now. So this could be really a good starting point for a long-term investment for me, even more if, as I guess, the dividend is safe. So what's my conclusion then? With Chevron, we have a dividend aristocrat with a long history and a strong market position. And what I really like is a low debt. So the low oil prices can be handled for a while. Not forever, but at least for the foreseen future. And on the negative side, of course, is a high depending on the oil price. And the other question on the long term is maybe the oil time over somewhere soon? And the renewable energy just take over more and more? I mean, that's for sure, I guess. But I think it needs more time than a lot of people think. But because of the high volatility and also nobody knows what happened to the oil price really, I will not add more shares at this moment. Then take a look into my portfolio. So here you can see the proportion of my portfolio and all of the stocks I showed you until now. And you see Chevron is just the biggest position, and at all it's the fourth largest position in my portfolio, so there are 3 more to come. And with the addition of Chevron and the very high gains I have right now of over 40%, also the outperformance to the S&P just, of course, is a little bit larger than before. And we can see here the outperformance to the S&P since the start of December, when I started this American portfolio, is right now at almost exactly 17%. And that's a very nice outperformance. I'm really happy about that. So just let's see how this will work out in the future. So that's it for today with my analysis of Chevron. I hope you enjoyed. And in the next few days, I will show you my last 3 stocks out of my portfolio. This will be the 3 biggest positions in my portfolio. So for me, it's just more important with every stock I show you. So I hope you will stick with me. But before I finish, give me a thumbs up, subscribe to the channel, ring the notification bell to never miss another video. And see you the next time. Take care. Bye bye.